Cool. All right. Good morning, everyone. Super excited to see everybody here this morning. And so this is TradFi in the streets and DeFi in the sheets, and we're super excited for this conversation with you guys. Why don't we before we dig in, let's go around and do some introductions. So I'm Matt Homer, and I work for a venture fund called NYCA Partners. And why don't we start over here with Bea?
Morning, gang. I'm Bea O'Carroll. I'm an MD at RADKL.
Hey, Vanessa Grellet, Head of Portfolio Growth at Coinfund.
William Herkelrath. I run biz dev at Chainlink Labs.
Hi, I'm Ayesha. I head business development and operations at LedgerPrime, and I also teach blockchain at NYU Tandon.
All right, great. So it is. I don't even know what day it is. It's like it's. I know it's Saturday, but it's just what is it? Is it like the 18th or something like the 17th? So the year is almost over. So I thought we would start just by reflecting on the year, which I think was 2021.
Depending on like.
So let's just start with that. So I mean, what if you look back at 2021? I mean, a lot has happened in the world. What has DeFi accomplished, and where has DeFi fallen short? Whoever wants to start.
I could start. So I think for me, from our perspective, it's kind of where we've accomplished things in DeFi is that there are so many new companies now that are helping institutions like traditional corporate entities that kind of run into some issues around at like KYC and things like that. There's all these new analytics that are preserving the privacy, the access, the sovereignty aspects of DeFi, which is what we all love and why we're here and why we're also into it. And sort of bridging that gap. So allowing us to be able to do wallet analytics, see who's in the pool, see what's going on, and making it like easier for those of us who have to go to compliance and risk and say like, hey, no, seriously, look, we're not dealing with North Korean plutonium dealers here. Like this, we can prove it, right? And then from a security perspective, there's been a number of new companies, some of whom are speaking in the next 2 days, that are making it easier for us to access like audit reports, for example, and where the security breaches are, so we can get a much better handle on the security risks. I would say on the flip side, where it's fallen short is that there is still an extreme need for guides and Sherpas. So it's not like super easy or intuitive to sort of leap in and start getting involved, right? You sort of need someone to be like, oh, hey, did you hear about this platform? This is how you do it. Get this wallet. But what do you guys think?
So I think what was really exciting this year was DeFi 2.0 and really finding additional liquidity access and really, new innovation in that space. And then the other thing that was also salient is really the cross-chain applications and new projects, and Solana coming in and a lot of projects in that space, and some innovation around margin and things like that, where you're going to see tools that are helpful for institutions because they have some specific constraints, and then new, not DeFi primitives, but new ways of generating the yield.
It was an amazing year, right? I mean, I don't know what the exact number in TVL is from a year back, and then where it is now. We'll just pass it over to Ayesha. She knows. No, look, there's huge numbers, right? What's happened in the last year has been insane. The amount of growth, the amount of adoption more broadly. I actually don't think I would bother trying to find out what went wrong per se or say anything negative. I think it's growing pains that are totally normal and natural in every industry. And a lot of us up here, whether we like it or not, have seen multiple revolutions in our lifetimes. We were talking about that backstage. And in that process, you're always going to have bumps in the road, and maybe certain individual actors not being the most beneficial for the community. But that's all totally to be expected along the road. And it's just been an amazing, amazing set of growth. So I think we should all just be incredibly happy and proud that we're all part of it.
So yes, the number is 300 billion in TVL and 5 million wallets interacting in DeFi on daily basis, which you come to think of it for 2 years is like bonkers. But I think what I would say is like, and remember we went to ETH Denver 2020 so early on. We didn't even probably see this growth the way it's grown, but DeFi is not on Ethereum anymore, right? There's like Solana, Avalanche, Luna, and it just keeps going and going. And like infrastructure, like you guys, Chainlink, API 3, Graph, and all like play a huge part. Um, Obviously there's a risk element to it, these hacks, but then the thing is that on the bottom level it's still a nascent technology, so we're still learning on how to make these networks secure as we go on. But I think this is like part of the growing pains, like as well, and like Vanessa and B have said it already.
I mean, maybe we can talk a little bit about that, but also look forward to the next year and get your guys' thoughts on what you expect in 2022. What do you hope DeFi will accomplish in 2022? Which of these growing pains will be overcome in 2022?
I think more retail access we've started seeing, and you guys probably too have started seeing projects that are trying to focus more on the retail front. So which is kind of very much needed. If you ever are on a like call with like your bank, you probably would want to shoot yourself. So that kind of retail, like this project we're looking into, RT Finance, fully collateralized, pay now, buy now and pay later type of loans. On the derivative side, because we're a quant fund first, we like interacting more in DeFi than like CME or Deribit and all, because they're so innovative, and across all chains. So I think that's something that we'd probably be looking forward to.
So I think a lot of the regulatory issues are going to continue to be discussed, and participants are trying to find solutions for institutions to participate, and so we're going to see a growing rate of acceleration for institutions. Everyone is coming in, like all the hedge funds, like are allocating part of their portfolio to crypto, and I think when they discover DeFi, they're going to be like, what? Like, we really need to get there because it's just extraordinary returns that you just can't get on the market. So I think there's going to be those two trends. And I'm less worried about the regulatory constraints. I think we're finding solutions. There's AML KYC wallets. There are institutional pools. And the question is the institutional pool going to dwarf the retail and the crypto natives? So that's something that you may have an opinion on.
Yeah, I think in a word, I would say more. Everybody wants more capacity, more security, do this faster, quicker, larger, right? There's a lot of resources to be deployed, but you need to remember why do we get in this in the first place, right? Like for me, it kind of boils down to three things: access, sovereignty, excuse me, and privacy. Right. So access is like, in theory, everyone who has access to the internet should be able to get on this, right? Everyone should be able to take advantage of this type of finance, right? What's the reality? Not yet. But like William said, it's like a work in process, right? Everything's really young and you can't be critical because we're growing it. The institutions want to be able to deploy a lot of capital, but we don't want to run over anybody. Right. So it's like, how do you get the platforms to the point, or more platforms, that we can actually do more experiments and deploy more capital and get going while preserving the privacy aspect so that there's transparency, we can make our compliance people comfortable, but we still can maintain our privacy of our transactions and who we are and transact that way. And the sovereignty of keeping control of your wallets and your own funds, right? Like, the other big reason why most of us are in here is like, we don't want a third party that's going to tell you, no, you need to do it this way, or put your money on this platform. Or, you know what, actually, Matt, I don't like what you tweeted this week. I'm going to just turn your chip off. You can't do anything. So it's kind of like, it's that sort of, that's what I'm personally looking for the next year.
Yeah, and wondering, sorry, if there's a large flow of institutional money coming in, are we going to be able to keep the returns that are currently available on DeFi?
One thing I just wanted to add to that institutional part. So our largest LP is LP in 5 different funds, and I just had a catch up call with him like 2 weeks ago. They've hired 2 DeFi analysts. And he was pretty early on in crypto, does not hold any assets, but and this is like a sentiment that we've started seeing in growing institutional funds too, family offices that are deploying. And and next year, early on next year, there's so much focus on like events, institutional events that are just want to meet these crypto funds. So yeah.
I don't have a chip that can be turned off or on. I just want to be very clear about that. I don't want anyone trying to look for my chip. It's nowhere on my person at any point in time. What happened? I know there's probably some people who are concerned about, okay, we're going to move in this KYC AML direction, but I think they're missing all of the real benefits that brings. And that's what's going to make everything happen to that next level. So it's not just about bringing the larger institutions in, which will absolutely happen probably through folks like Ayesha and yourself, Vanessa, but it is about, well, gee, once you actually know who some of these parties are, now you can go to an under collateralized system relative to a fully collateralized system. Now you can start getting insurance products. Now you can start getting insurance at the platform level. You can start getting insurance at the local level. You can get insurance maybe in a jurisdictional level. These are the natural evolutions of how financial markets build out. This has all been done before. Again, those of us who've been around a little bit have seen this occur in other systems. I spent a lot of my life overseas building out some of these markets in third world countries. This is exactly what happens in this process. So it might be overwhelming for people to see what the next step is, but actually once you actually start doing it a little bit more normally, the way that normal markets work, you get all those other benefits that are going to come with that as well. And there's going to be a tremendous opportunity to invent new products that are going to fill those niches as we go.
And do you think you can still achieve everything that Bea was talking about with kind of more traditional players coming into the space?
We're going to find out. I don't see why not. I mean, it's look, we're all inventing this every day. We all wake up every morning and we're not sure exactly, I guess, whether our chip's been turned off. But
Or we're going to be in a club.
Or that we're going to be in a club in
Brooklyn,
Bushwick on
having
a
Bloody
Saturday
Marys.
morning. Some of us just stayed all night. We were just there and just came over. No, but look, no one knows, right? No one knows. I think what we're learning that is that every single time there is something that we all think is going to happen, 6 months later we were all wrong. So I think it's kind of silly to suggest that we know. But the reality is that without question, you bring more money, you bring more talent, you bring more investment, you bring more VC capital, you bring more entrepreneurs. I think half the people here are probably entrepreneurs, if not more, who are going to build the next cool thing. You bring innovation and people to a space, and a lot of amazing things are going to happen.
I just want to add one thing on APYs. Newer chains that are launching DeFi protocols offer higher APYs, and once that stabilizes, then people move on capital. But then what happens to projects like like Ethereum or Solana? Ethereum is where the innovation is, right? Like Ethereum is always like 3 steps ahead. So I won't worry about APY. Like after it starts slowing down on Avalanche, I'm so sure the market would focus on Luna. So that's something to also look into.
No, I mean that's a great line of discussion, though. I mean, I think that you would assume that when more liquidity does come in at some point, right, that will be compressed a bit over time. But
I think we're still like what 4 years away from that, like stable APYs. Yeah.
So we've already started talking about TradFi, but let's talk about that a little bit more. So why, and I think that William, you kind of explained why TradFi is important to the future of DeFi, but why don't we get some additional perspectives? And what is the relationship of TradFi to DeFi, and how important is it really to the evolution of the DeFi ecosystem? So, and any other?
Yeah. I mean, I guess like from a scaling perspective and like testing it out kind of perspective, you first man through the door, right? Like, so the TradFi crowd have already experienced a couple of iterations of new products and where things kind of maybe go in a different direction, and being able to use that experience and be like, okay, so we've got resources now, right? Like I was an entrepreneur and now I work for a large institution, and it's like, okay, so I learned all this stuff, but now I've got access to a lot more tech, balance sheet, et cetera, like, okay, what other companies are out here? How can I share what I've learned? And here's what we need, right? Here's how we think about it. These are the boxes I need to check before I can get rocking. What are you doing? Like, can I help you? Can we move this along? I think it's critical.
So I think TradFi is hungry for yield or desperate for yield. And so they have something that DeFi doesn't have right now is access to the end customer and in a regulated environment. So I see a world where they maintain sort of that portal and access, but in the back end, they leverage the DeFi protocols to generate yield. And I think that's going to be the future of DeFi and TradFi coming together. There are already institutions that are trying to do that. The regulators coming in says, no, you can't do that. But actually, they will be able to do that because they already are regulated. And so, it's going to be an easier on-ramp for consumers and other institutions to leverage the DeFi in the back end through traditional finance.
Yeah, and I'm just going to say from a scaling perspective, the reality is that we're all maybe kind of cool kids and we've all got MetaMask wallets or whatever else. But the reality is that the vast majority of humans probably won't go that route. And they will probably be more comfortable working with their local bank. And my parents will certainly never get involved, but they might do if it's a product that's available to them through their local bank, right? So there's just a huge amount of more people that you can reach if you are willing to work with institutions that have those users already.
I think it's like it's a volumes game, right? At the end of the day. So as the volume increase, but so far we've seen like with Anchorage's case or Falcon X's case that are offering these yield products to institutions already, and these guys like do have a good stack of institutional investors on their book. So I think more of those products, like probably coming out of like other larger projects.
Yeah, like Aave Pro, and then you've got Panther Protocol that's kind of popping up to do like a dark pool with KYC. There's a lot of really cool stuff going, and a lot of those guys just need a shot in the arm, right? You need either the capital from an investment perspective, you need the users, you need the actual funds on your platform to prove it out, see if it works.
So would you all agree that we'll have institutional grade products and then we'll have kind of the more pure DeFi products, or do you think that they'll all, I mean, how will it evolve?
I would love to hear what everybody else thinks. I don't know how you do that because you're sort of splitting the liquidity then, right? Like, and having like two classes of it doesn't feel right because it's sort of not really in line with our ethos. What do you think, William?
Well, we already have that case, right? We already have crypto for certain people and crypto on Coinbase. You could argue that you already have this differentiation and they coexist perfectly fine, and there doesn't seem to be any challenges there. So I see no reason why we wouldn't have potentially something similar.
Do you like it though? Like, you like that idea of having two split liquidity pools, like in terms of the broader kind of market access, right? Like what we were talking about before.
Yeah, that's what I was saying about, is institutional money going to like completely blow up the space with those separate pools? So you have MetaMask institutional, you have Aave Arc, like, are they going to become bigger than the existing pools and then just crowd out DeFi participants? So that's the risk. And that might be the evolution of it.
But why does it have to be a zero-sum game? I mean, and that's a genuine question. I don't know. I mean, why do you think that? What I'm hearing you say is that you think that there is some sort of ceiling as to what can be achieved, and therefore we have to like split it up.
Well,
But
if
why
there's
is there
more liquidity and liquidity attracts liquidity, and so if there's more liquidity on the institutional side, then everything will move there, and you won't have a permissionless access. So it's just, and then there's risk that the returns are not the same in both.
I mean,
William, are you just saying that the market's going to be so huge that you'll have plenty of liquidity on both sides? Or is
I
that...
think of the bond market today, right? The bond market has these super AAA grade, whatever, kind of stuff that institutions play in. And then goes all the way down and different people play in different pools. And there doesn't seem to be a lack of money in any of those different products. And people who might be taking more risk have to offer more APY to compensate. I mean, it seems like the whole world, trillions and trillions and trillions of dollars seem to work in our system today. So it's not clear to me why we wouldn't see the same possible thing happen here. But I'm to be honest, these folks know more about that than I do. So I really shouldn't be making a comment.
No, I mean, not at all. I think it's a fascinating conversation, right? And it reminds me of like the old permission versus non-permission blockchain argument, right? From like six years ago. And it's like, okay, but then you're kind of creating two things. And like, why are we doing this in the first place? And the whole idea is that this is supposed to be open to everyone. So that might be a very Pollyanna, like ideological perspective, but that's why I love talking about it and hearing what everybody thinks. Cause yeah, right. It works in the traditional markets right now. There are separate pots of liquidity and fine. But like, is that what we were trying to achieve? Right? What do you think, Matt? I mean, you've seen it from all angles, right? Because you were at the regulator, now you're at a VC. You get to see all of these different companies. Like, what do you think?
Yeah, I mean, I think, I mean, certainly in the short term, you'll see parallel systems emerge. I mean, absolutely. I think whether they're connected in some way or they're, both tapping into some common liquidity pool, I don't know. I mean, it'd be interesting to see, but I think in the short term, absolutely. I think institutional customers, they want something that their regulators will be comfortable with, and I think separate pools is a way to achieve that.
Yeah, I think in all markets, regulation is a centralizing force, has a force function of that, and we'll see that here too. Yeah.
Did you have something?
I was just going to say it's going to be parallel for like next 5 to 7 years.
Yeah.
And the reason I say that is because funds like us we're the guinea pigs, right? Guinea pigs of these pool. So every single day we take a risk of like parking capital, knowing that there could be a hack tomorrow and we could lose it. So how are we offering the same kind of product to like, booth pay? So I think that, going back and forth, giving our feedback, that's kind of increasing TVL in years to come. And then crypto is going to be in R&D for like next good 10 to 15 years or so, right? Like we've just seen first iteration of layer ones. We still need to see layer twos, which next year is going to be all about. So then more capital coming in. That means more guinea pig experiments. So I think that it's a parallel run for a few years.
So I have a question for Vanessa and Ayesha. What are the top 3 things you look at in terms of evaluation before you guys invest in a DeFi platform?
The team. That's it.
That's it?
Yeah.
Just one team. What about the team?
The team, like the capacity of the team to execute. If it's a smart team, they will pivot if they don't have the right, product market fit. So I think for me, that's the essential thing.
Same thing, how technical the team is, because that way they can control the product to its core and they can spin off if needed to, and they can maintain the risk portfolio. So yeah, team.
Yeah, I think team is huge, right? I mean, we're so early in the space. I mean, it does feel like we're in the dial-up era of crypto. And for those of us who lived during the dial-up era, remember how like clunky and awkward and like frustrating it was?
No, I have no idea what you're talking about.
And the team is everything. I agree, right? So let's talk about what TradFi wants for a second. So let's say there's some DeFi innovators listening in or in the audience, and they want to bring traditional or institutional customers into what they're building. I mean, you mentioned, of course, that they're looking for yield, but in terms of what's going to give them comfort, participating in a DeFi solution. We talked about KYC. What else? Like security? What other things are institutional folks looking for?
I mean, I would say like the 2 big first things would be like, are you screening against sanctioned countries? Like, do you have geoblocks up so that you don't have in your treasury or in your pools any kind of sanctioned funds, right? Would be certainly number 1. Is it usable? Can we actually do something with it? Like, is it secure? Do you have felons on your team, for example, or people who like were convicted as of something? Or you're out, William, blown up. But like, yeah, and then security, like to your point, like what are the flaws? Like, what are the chances of me being hacked? Are my funds secure? Like, just kind of, it's almost kind of common sense stuff, right? But like there's a lot of people that, because the pure nature of this is like anyone can access this from anywhere at any time. Like I'll get in really big trouble if I do that, right?
And how do you demonstrate that you're doing that?
Demonstrate that I'm
That-
checking for that, or
you know,
demonstrate that, how
you're-
does the
that you're
company
achieving
do
all
it?
of that, like through third-party audits?
Oh
or like
yeah,
how do you,
you've got,
how
there's
it's
a lot of companies that like can do audits for you or like interpret the audit reports. You like, if you're a company like ours, you've got a whole team of tech resources, right? So those guys know how to read code. They're going to look, they're going to see like, okay, like, are there any like blatant flaws here? So like enhanced due diligence, basically.
I think to that same respect, you're going to see a growth in platform like rating agencies and platform, rating scores. We have some folks that are working with us actually on that right now. So I think 2022, you'll see some larger companies getting into that space who've rated bonds in the past or whatever else, and who might want to be, making those same kind of comments. And that's going to be interesting. And that's going to have an interesting, when it comes to collateralization, when it comes to, what level or what insurance might be offered. Again, there's more traditional things that can happen that will make people feel more comfortable. If there's an insurance platform, if an insured platform versus an uninsured platform, things of that nature.
Oh yeah, definitely.
Yeah,
One-
maybe.
One thing I just wanted to add, because I've been dealing with it for past 2 weeks and pretty annoying, credit worthiness, right? Like the entire crypto space literally works on reputation, and there's so much borrowing and lending on daily basis, but it's only because I know their team, they know us, and it's like, okay, fine, just give us 100 BTC. But then all these new institutions that are getting involved are asking us, okay, so where do we check your credit profile? And we're like, I mean, I can speak to a person about it and give him, but I don't know. And then risk assessments, right? So we still don't have products for that. So, and huge market if anyone wants to start a project in credit. But yeah,
Is that something, William, like credit worthiness? Is that something like you guys are working on bringing in traditional credit scoring into DeFi, or
We
how
have
do you see
this.
that?
Thank you. Yeah, we have this amazing role in the ecosystem where we get to help people build cool stuff. It's not that we necessarily are personally building all of it as much as we get to ensure that they have the infrastructure and the network and the third parties, transaction modeling system that they need to succeed. The short answer to your question is absolutely yes. There are multiple parties that are building on Chainlink right now to produce credit ratings, credit scores, scores for DeFi platforms. I have no idea how much any of that goes to live. That's those are their projects, not
This is
mine.
stuff that's bringing in
Yeah.
from outside of DeFi. So
That's exactly right. They're taking off-chain data, bringing it on-chain, using on-chain data, and then trying to push it off-chain, doing off-chain compute on-chain. They need infrastructure to do that. So we have this wonderful role where we get to help them do all that. But those are their projects at the end of the day, and there's some really exciting stuff people are talking about. And I hope they all make it. I hope they all go live.
So I think the number one risk in sort of this credit worthiness assessment is that we use the former paradigms to and translate that into DeFi, especially for individuals. I think the credit bureau ratings, etc., is like really flawed, and in a society where you have to borrow and have credit in order to have a good credit, which is kind of the world upside down. If we're continuing to do that, we're not going to innovate, and we're just repeating the errors of the past, right?
I think that's another cool part of DeFi, right? Is that like the whole transparency, it's like takes transparency to another level. So you don't have to rely on like a centralized credit agency to be like, oh yeah, Vanessa, you're awesome. You get an A. William, you're out. You're a felon. We heard about you before. Like, no, I'm going to give you a D. And you know what? Yesterday you were an A, but today you're a D. Like now there's like, you can see all the wallet activity, right? You can see the transactions. You can come up with your own ability to be like, okay, maybe I want to like whitelist my wallet and all of my transactions for my company are going to go from here. So you can tell whether like I welched on a bet or I like, you can see it. You can see the score, right? And it's
High
just
score.
clear.
Great point. I mean, we do know. I mean, I think that it's a really good point because we do know that traditional credit reporting is full of errors. I want to say like something like a quarter of credit reports or something have errors in them, right? So it's not a very good system. How much can you rely on-chain data for credit reporting? Like, I mean, is that something that you have to be like a super user and have like a ton of transactions, or I mean, I don't know. Maybe we don't know yet, but like, to what extent could you fully rely on chain data?
I just call my data scientist friends at the companies and be like, yo, what do you think about these guys? Do they know what they're doing?
So there's multiple parties that produce, like wallet, that you give them a wallet address and they'll give you the full history of everything that's ever come in and out of that wallet. There's services that already exist, and those services are being used by people for security purposes. That's effectively on-chain data, as far as I can tell. Probably what you're describing. But
Does
I do.
that mean,
yeah.
I mean, you've got to be on you've got to I mean, I guess I'm wondering, like, at what point do you have enough data to, like, as a user? I mean, I don't know.
That's a good question. I think off-chain data is going to be pretty critical for quite some time. I mean, I think that's just the reality of it. And
it doesn't mean you can't pull in non-traditional off-chain data, right? Things like cash flow, underwriting, or things beyond just kind of a Equifax report, right? I mean, there's probably other data you can pull in that helps you not just entrench kind of the biases that exist in the current system, right?
So we all have biases. My bias is that I strongly believe in decentralized aggregate results rather than results from any one individual party, which is why I work at Chainlink Labs. But so it's not hard for me to see. I saw somebody whistle, but it's not hard for me to picture a credit score that is based on an oracle that you get through a library, and that is actually the aggregate of 6 or 7 or 10 different companies, and then you throw out the bad numbers and you get something in the middle. That's obviously the kind of world that we're trying to build at Chainlink, and I think that would certainly help keep it any one credit report having to. I just refinanced my mortgage about a year and a half ago. There was one crazy little credit report, and I ended up having to pay some money to get my bips back down 15 bips because somebody messed something up. I know exactly what you mean.
It's horrible. Yeah, I've had my identity stolen, so I know exactly what.
And I'm so sorry for doing that to you, but but the point is that you can't let those little things. You can't let one error. You have to have multiple parties that are making that comment and then come up with an average and an aggregate. That's really the secret, I think, to some of these things, is just to decentralize the importance of any one individual data point.
William, you mentioned insurance a couple times, and it's something I don't know if you want to talk more about it, but I mean, I do think that it's a super undeveloped part of the ecosystem, and it does feel like an area where, for this space to go mainstream, there will be a role for insurance. It doesn't seem like the large insurers have really figured out like how to underwrite or price risk in this space. But I mean, anything you want to talk about in the insurance space?
So when it comes, so they're all looking at it. So I will say with confidence, they're not ignoring it. Because they are all.
When you say they, I mean, you're talking about the
large
big underwriters,
insurers,
or
the big names, all have projects. They all have specialists. They're all calling in to people like ourselves and probably to some of the other folks on the panel and trying to figure out how they would get involved. So who knows who's going to go first? But they're not ignoring it, and they're not pretending it's a 2027 problem. They're genuinely trying to figure out if they can get involved in 2022. So that much I can say with some confidence. I'm sure other people would agree with that. But insurance is kind of a perfect play as the next logical step, because again, like you said, a lot of this data is extremely well known. There's a lot of transparency. At the platform level, you can see exactly what's happening, right? So there's a lot of good information. One of the biggest challenges in insurance is not having good information. Actually, we have perfect information in this case, right? So no, I think they're actually going to come. But no, it's not just insurance for DeFi. There's also insurance products are already being offered on blockchains in areas of the world that they couldn't be offered in the past because of DeFi, right? You can now actually offer insurance to farmers in Africa because you can actually afford to do that, because you can tap into a DeFi pool, and we're all happy to fund some of those activities. And though they're happy to pay larger APYs as part of those policies, and this is already happening. And we don't always know what's happening on the other side of those pools, but it's amazing, interesting things that are going on the other side of the pool. So people that you're lending to are doing some interesting things with that capital, right? So it's a fascinating situation.
I have a question for you, William. Speaking of that, and going back to the pretty amazing title of this panel, do you have any institutions? I don't have to tell us, obviously, what segment, but do you have any institutions that are building on Chainlink for DeFi, or is it mainly, are you dealing with like young companies and entrepreneurs?
So as we mentioned before, that any company, as we know, can only interoperate with KYC pools, just as a rule, right? So there's no way that any registered European or American company is going to get involved in a non-KYC pool. To that extent, we can and are trying to help people get involved in that all the time. Yes, I think that's an easy question. There are not that many KYC pools though, and I think that's an interesting question in and of itself. Why is that the case? But that's that I don't know if it's DeFi at that point. Like, it's an interesting question. Do we still call it DeFi if there's somebody who's KYC'd somebody? Is that something different? And maybe we'll come up with a new acronym over time.
CDFi or something.
I heard someone I was on a panel a couple weeks ago. Someone called it Real Fi. We'll have to compete. We'll have to compete for the name. I don't know, but it's a fair question. But that look, there's no question that institutions want to get involved and they want to get involved in KYC pools. And obviously not here. But I know they're sponsoring their event and they're important partners to us. They're doing some great stuff in that space, right? So there's definitely people who are trying to build that market out. No question.
Yeah, but I think if you're an entrepreneur, you want to start with the core DeFi protocols. I don't know how successful and innovative something that's catering only to traditional finance will be. I think, you see Aave, Arc, you see MetaMask Institutional, the basis of which is really the decentralized nature of the solutions that they found. And I would recommend to go rather that route if I was an entrepreneur or an innovator.
Is that for purposes of attracting talent and capital?
Well,
or all
first
the above,
attract talent and just like thinking out of the box, right? Because innovation is meant to replace the existing system, not to cater to it.
I was just going to add to Will's insurance thing. They all are dinosaurs. So I hope that someone within DeFi come up with the insurance. I mean, Nexus, Sherlock, and all these guys are working on it, right? And then they're looking for actually very innovative solutions like buying it, an offshore entity and provide that kind of collateral and protection. But I really hope that I do not get secured by like whoever secures like.
It is very hard to it's very hard to innovate in the insurance. I mean, that's why, if you look at just fintech, right? Like insurtech is like 5 years before where fintech was like 40 years ago or whatever.
But
it's really hard, right?
What you don't know that's happening at the back end is that all those big companies are financing all of those little startups.
Yes.
That's what you don't realize is happening. So you might call them dinosaurs. They know they're dinosaurs and they're not trying to do it in-house. They're funding entrepreneurs, and then they just buy it if it works out. So they're providing a lot of liquidity right now into people trying to solve this problem.
And yeah, so two things. One, totally agree with you, William. And there's like skunkworks labs and stuff that a lot of these big companies have to try to come up with innovative ideas and like get in the game. Speaking as someone like who could be called a dinosaur, there's a lot of cool stuff happening, and there's a lot of money going to like digging to figuring that out. And like, okay, here, have Fidelity, for example, right? Fidelity's had Fidelity Labs since before most people were even dealing with Bitcoin. And then to your point, Vanessa, the replacement of the system is something that we talk a lot about at work with Mr. Tabak here in the front row. Are we trying to replace it, or are we building like an alternate economic model, right? Like, could there be multiple things that you could choose, or are we trying to like destroy the original model and put a new one in place?
It's not about destroying. It's like innovation, and that's sort of the cycle of innovation is like people just go to that, and it makes the former system obsolete because there's no appetite for that. So it's not destroying it, it's just making it obsolete.
We could have a lot of fun with this topic for sure. But I mean, does the existing system just co-opt the new system though? I mean,
I don't think that will happen.
Yeah.
I mean, we're all going to have to look for new jobs if that's the case, right?
But I don't see, if you look at the history of innovation, you don't see that happening, right? I mean, everyone just ends up doing the new thing is what happens, right? I mean, there was, I was on a panel a few weeks back when I was one of the few people who was old enough to know that when the internet first came out, for 2 years, journalists were still comparing the difference between brick and mortar companies versus internet companies as if they were different things, right? And I kid you not, for those of us who were in Silicon Valley in the 90s, we think this was a ridiculous question. Of course, everyone is going to be on the internet, but most people didn't really understand that the internet was going to actually run everyone's life. Everyone just moves to the thing that's better and cooler and newer. It doesn't go the other way.
All right. So we talked about a lot of different things. We talked about insurance. Are there other specific examples of areas where TradFi, DeFi intersection, examples of exciting things that you guys like that's happening in that space, or things that you think need to happen in that space?
Trading,
Sorry.
right?
Yeah, I was
Think-
gonna say trading.
Trading, like trading derivatives, options, even just basic spot markets. I feel like interacting with Uniswap, or someone like Uniswap, where you're just plugging in your wallet, your it's gas fees like ignored. uh it's so much more easier than placing a buy order on like TD Ameritrade or something.
Yeah, it's like access, right? It goes back to the first point of like if I'm just me and I'm savvy enough to figure out like how to get the MetaMask wallet and how to get whatever wallets, like I can have a couple of big bags of things, right? Then I can go to an decentralized options platform and protect my own investment there. I don't have to, I'm not going to a broker, right? I'm not like, I don't have a limited set of products that I can take because I just have one institution that I'm dealing with. It's accountability as well. It goes back to the sovereignty point, right? I am in charge of it. If I get hacked or if I lose my money because I put the wrong bet on, that's only on me. But like it's pretty powerful stuff, right? When you can take that, like right now, it's just accredited investors that are able to really tap those financial products. So now giving this access to everyone, yeah, will there be blood? Probably. Like this is going to be a lot of learning. What is it? Teachable moments, apparently, is the phrase.
And one thing I just wanted to add, like, on the options side and, like perps and all, these are fully collateralized positions. So it's not like you're dealing with some scam or anything. So don't even like, if any anti-DeFi person tells you that, just say that doesn't happen. So like just gives you an idea that how innovative DeFi can be if you're trying to use it like on everyday models to do your trades. And we've seen it at our fund, like how even our own book has gone so much more into DeFi derivatives than last year, and it's just going to grow more like next year.
One thing that I find really exciting is the financialization of NFTs. And I don't think institutions are on top of this. And I think that's going to be such a huge pool of assets because everything can be an NFT, right? Right now, we're art and collectibles, but we'll see tokenization of financial instruments and things like that with incredible innovation. So, if I were an entrepreneur, I would go there and do something there. But I think that's something that the institutions will still need time to wrap their head around. And also, given custody challenges, et cetera, I think that's going to take time to catch up.
Yeah, I mean the NFT stuff is awesome, right? Like the trading opportunities here, which I don't. It's tangential to this panel, I guess, but it's pretty awesome, right? Because when you think about it, like by definition, an NFT, there's one of them, right? So it's not fungible. How do you price that? How do you manage that risk, right? Like, are there opportunities to be trading this off platform? Like, I think definitely, absolutely there are, but like then what do you do? Where do I custody it, right? Like, I think Chris Hughes is here from ETH Trust. Like, we had a fantastic conversation about all of this. Like, it's super exciting. And at the same time, it's like, wow, I never thought of this before. Like, are they really NFTs or is it like pseudo fungible because you've got classes of like apes and punks? So my price range is probably going to be here. And then there's like new companies like Nansen that have come up that are going to give you all the on-chain data for all the trades. So can I back into something that way? It's like, it's really cool because it's a totally brand new thing.
So I think like going back to your institutional will, JP Morgan, I think it was a month ago or 2-3 weeks ago, did a conference around like a crypto conference, right? Their own mini conference. And their NFT panel was all around that, how they're looking into NFTs as loyalty points. Now, given that how JP Morgan has been like anti crypto, anti Bitcoin, and how like slow they are in deploying it, but that kind of an idea generated by them, like for an audience, and and this also like happened through the NFT NYC week, is like, oh, why didn't I think of this? And this is such a cool idea. So if JP doesn't pick it up, someone on a smaller scale can. So yeah,
I would like someone in the audience to please come up with a way of NFTing my little coffee card. Since I never get to the 10th one, but I'd like to sell my first 6 punches to someone else, perhaps. But and I joke, but that is exactly what happens. I mean, that is what an NFT really is, right? You can. We should be actually commercializing all of these little things in our lives, and someone's going to do it. Someone here is absolutely going to do exactly that kind of things. It's going to be great.
Yeah.
I would say that the infrastructure is already there, though. That when you said, what is it, is there something TradFi needs beyond? I think the infrastructure is already there. I think that the number one thing that might have scared people would have been, okay, I'm in the smart contract, and if it executes, it's immutable. How am I sure that it's triggered properly? And you do so by having an extremely secure Oracle network or something of that nature to ensure that you're never possibly getting that wrong data point. You're never getting that wrong credit score that's throwing off the smart contract. So you have to just make sure you're using all the right tools, but the tool sets are there. They exist. The partners are there. The investors are there. The security firms are there. Everybody's here. And if you get the right group of people in the room, you're going to come up with something pretty great.
Yeah, we're doing it, right? Like and I work for an institutional company, and the fact that we exist and we're all here and we have this mandate to go figure it out and do it now, don't wait. Like that's huge. Didn't exist 6 years ago. It's really, really exciting.
Usability has come up a couple of times in different ways. You were talking about like the example of your parents or other people going to the bank. I mean, what do people think about the current state of usability with the wallets? And I guess what I'm wondering is, will the functionality that exists now with the wallets, will that become kind of, will people just relearn that and that will become kind of the native way? Or is it something where the usability will look, a little bit different? I don't know if anyone has any thoughts on it, but I've having helped people go through the process. I mean, all of us probably have like connecting the wallet, all that. It reminds me of when I was like in high school and taught my grandpa how to use like the computer. Right, I'd spend like an hour with him every weekend and like teach him how to use a computer, and it feels very much like the same. And so, will it become more intuitive, or will this just become the way that everyone like thinks about accessing these products in the future?
I think it's got to improve, right? Like it's really tough now that it takes an hour or so to actually tell someone who doesn't work in our world or show them how to do it. That being said, it's possible, right? Like part of the really cool thing is you can go on YouTube and watch a video. Like my brothers don't work in any kind of markets company at all, and they figured it out. And all of the guys that they work with are now like talking about what they're invested in and what platforms they're trading on and what they're staking in. So it's certainly possible, but for the widespread adoption that William was talking about and that what the panel was discussing earlier, you're gonna have to get it. There's got to be improvements on one on-ramp, right? Like, because you have to have crypto to get in the wallet to be able to transact. So like, how do you get that in the first place, right? And then how do you make sure that you've got it secured? You don't get SIM swapped and lose everything and then hate it and tell all your friends you hate it, right? Like, so it's a kind of a crappy answer to your question because it's 50-50, but like, I definitely think there's going to be improvement, but it's not terrible right now. Like, you can figure it out.
I think for widespread adoption, we're still looking at like someone like Coinbase and Robinhood to come and buy these assets first, hold, but then as time goes on, people who want to learn would be learning. And I think like MetaMask is so easy to use. Like it can only get easier, but I don't know how easy would that be. But yeah.
So,
At some
so
point
I
there's-
would disagree. I think MetaMask is not easy to use, and I worked at Consensus for a long time, and I'm still on the advisory board. But I like if you look at someone who's not a trader or a technologist, it's not a great experience, right? So it's really like there's a huge issue around UX, and then I speak to other L1s, and they're like, "Oh, our wallet is so easy," and I'm like, no, it's not. And once you have the wallet, you don't even know what to do with it. And so there needs to be more fiat on ramp, and it needs to be like your bank in a wallet. It needs to be something where you have all your assets, your NFTs, your retirement funds, things like that. Because if everything is not custodied in those wallets, then what's the purpose, right? But the UX UI of these wallets really needs to step up. Like, this is just not okay. And maybe it's controversial to say this, but Like people really need to think and put themselves in the user's shoes that are not crypto native. And like, how can they increase adoption? Because the goal of this is for everyone to have a wallet and everyone to have access, but we're not going to get there. MetaMask has only 10 million active users at this stage. That's peanuts. You know, when Facebook is going to turn on their wallet and their access, like it's 2 billion people.
That's exactly right. I'm very much of the opinion that a lot of people are going to be interacting with this universe through centralized parties. I think, but that's basically what Ayesha was just saying. And that is what it is, and there's nothing wrong with that. That's just how some people are going to prefer to do it, and some people are going to do it through Facebook. They're going to do it through Coinbase. They're going to do it through whatever else. Other people will prove to decide they want to do it holding their own wallets, and that I see no reason why that's a problem. And I think that's just the reality of how it'll grow.
And also the proliferation of wallets. Like, are you going to have a wallet for every L1? No, or L2? And that makes no sense. So there needs to be some aggregation and some interface here that is user friendly.
I do think there is some benefit to the kind of current system in the sense that I think we talked about this going more widespread, and I think that if it did go more widespread before some of the kinks have been worked out, you could imagine a lot of consumer harm, right? And so I think the advantage of the system being fewer participants in the system now, I think one benefit of that is that it provides a space to kind of innovate, and experiment without the degree of harm that mainstream consumers might experience if it were immediately more accessible. So I got a message from the organizer. So we've been talking now for about, I think, 55 minutes actually. So we got about 15 minutes left. I know that the organizers want us to open it up for some questions in a bit, so folks can start thinking of if they have questions. But I did want to ask first about two things. So I feel like we have to talk, if we're talking about the intersection of TradFi and DeFi, we have to probably talk about stable coins, at least for a moment here. And I don't think there's much happened in that space this year. But I mean, there's obviously a lot of attention on stable coins, a lot of regulatory attention in particular. What are people's thoughts on stable coins and the dependence of DeFi on stable coins? Will we see a stable coin that if or when will we see a stable coin that is not fiat backed, that enables everything to work perfectly within the ecosystem? Anyway, anyone have anything they want to say on this topic?
I think for the USDC family, I'm going to stick to what Brian Brooks said at the congressional hearing, that amongst this pristine panel, there's a project sitting that is trying for their banking license, and you guys are not granting it to them. That's Paxos technically. They've done all of their regulatory filing for them to be considered as a bank. So Paxos USD just becomes an acknowledged stablecoin. As far as algorithmic goes, I think we're a few years away out of it. We saw first iteration with basis, didn't work out. SEC, it did not even fly with SEC, and it was a phenomenal team that moved on to like BitCloud now, but now we've started seeing it with Terra, right? So I think it's a bit tricky because it's a very, very ambitious goal. That how do you peg a currency, keep it stable to an algorithm? So I think we're like about 2 years out of it.
Okay, one more topic, Web3. I mean, that's become like a much more part of the conversation over the last few months. So I guess the question there is Web3 a rebrand of DeFi? Is it something different? Like what's the connection between DeFi and Web3? Does anyone have any?
So for me, Web3 is really, the building blocks of decentralized infrastructure, identity, things like the graph, data, and things like that. So for me, it's not even a question. Like, is DeFi is some financial primitive that leverages Web3 infrastructure. I think the connectivity is not yet totally, established because of how early and how long term the Web3 infrastructure needs to be. So we still need to see decentralized Amazon, decentralized data, and things like that, decentralized storage beyond IPFS that really powers that entire infrastructures, decentralized wallets, and things like that.
Yeah, I think that's there's nothing really much to add except that it's just a different word. I've heard people call, I don't know, metaverse. I mean, there's everyone wants to use a different word for what this future thing might look like and how it's going to be. The tool sets are coming. People are building them. They want to build decentralized versions of everything. I think that's incredibly exciting. Even we were talking about KYC earlier. You can easily do decentralized KYC where you could just pass in basic non information and just get a yes no back from a centralized party or a collection of centralized parties through a single oracle, for example. And you could write data or consume data in using zero knowledge proof so that you don't have to expose any all of this stuff can be done already, and people are already building these things. It's just going to take a little while for them to get to market. No one knows exactly how long those things will take to get to market, but these things are all the little building blocks you need so that you can then build more and more services and more aggressive services. The original DeFi contracts that were available a year ago compared to the ones that are sophisticatedly available now, the same thing happens as Web3 grows. The insurance contracts and everything we already mentioned, it gets more and more sophisticated. You just need all those little tools to fill in the gaps so that you can do more, more interesting things.
Great. So I don't know really how what the setup looks like for audience Q&A, if there's someone with a microphone, but if anyone, maybe we can see what questions there are and we can group a few questions together and then the panel can respond. So good. It looks like we've got.
Hello, my name is Alexander Schul. I'm one of the co-founders of the Banky Decentralized Liquidity
Could
Market.
you mind speaking a little
on
louder,
Avalanche.
please?
Is this better?
Yeah.
Okay, great. I'm one of the founders of the Banky Decentralized Liquidity Markets on Avalanche. I believe it was Vanessa mentioned early in the talk that one of the necessary activities within the convergence of decentralized finance markets with TradFi actors is actually a shepherding or handholding, so to speak, of those participants into the space, because it is quite complex. On a practical level, what does yourself or anybody else in the panel envision that as? What does that actually look like in terms of bringing those people into the space?
Yeah, I think that was me.
Oh, sorry.
No, it's okay. What does it? So just to repeat the question. So what does it look like to handhold people through the space?
Exactly. So one of our goals is actually onboarding TradFi into the space. That's one of our focuses, right? But what does that actually look like? Because I'm not a TradFi institution. I don't know what they need specifically. So
Okay.
what does that look like?
So as the resident dinosaur, I think having a like that's true. One of the simplest things is like a human, right? Like we need to talk to somebody. I need to actually have a point of contact, a person that I can be like, hey, so what about this? And like, can you guys get me this documentation? Like I need to see this. There's no SOC 2. Like SOC 2 is a document in the traditional world that sort of people have generally accepted that if you've gotten through that, you've achieved a status of like, okay, your stuff is in order. But like, so we need to come up with that, right? So I need somebody from your team to be like, okay, I'll work with you, B. Like, let's get what you need. This is how it works. This is how you can plug in. I need somebody from your tech team to talk to my tech guys to figure out like, okay, how do we electronically connect to you? Like, what are the API specs? I don't mean like it's kind of that simple.
Makes sense, yeah.
I was going to agree 100%. I think you're probably, just having a human is very important. Yeah.
Okay, so it seems like overall then one of the most important steps that any initiative can take to blend these two markets is actually to have kind of an organizational lead, somebody who can structure communication, structure technical connections between both sides.
Yeah, it doesn't need to be just one like it doesn't I wouldn't say just go hire someone that's going to talk to me. Like I just need access to someone on your team that is like, oh god, it's not her again, is it? Like, but that's going to be like, yeah, I'll call you back, like let's get it done.
But you may need someone who has worked in traditional finance who can be that interface, because I've seen that when we were dealing with enterprise, and just the way you work is just so different. So you need to have someone who comes up with the same language also, and also responds in a really professional way, based on sort of enterprise grade requirements in order to have that interface. So the APIs need to be sort of easy to integrate with existing systems, and they just need to speak the same language.
Makes complete sense, because it is clear there is a relative divergence in terms of the standards that traditional finance actors have with expectations versus coming to VC meetings with DeFi groups and guys in sandals and board shorts. So even just on a practical level, there's a difference, but I'm sure within jargon and even technical requirements.
Yeah, because for
huge
example,
difference.
let's say you have a decentralized protocol. So no one's
Mhm.
going to call the protocol, but you have the original team, right, that has one company that is, contributing to the protocol. You could have as the mandate of that company to do that user interface, to do the also the customer service. So for example, when I was at Consensus, we had a very strong customer service group that served all the other products at Consensus, and the guy came from Intel, traditional, and understood what people wanted for more enterprise grade requirements. So onboarding customer service is super important.
Great. I think there
Fantastic.
were a couple other
Yeah.
questions. If you don't mind, if you're done, if you don't mind handing the mic off, we'll do that. So-
My boss.
I wasn't going to say my name. First of all, thank you. Fascinating talk. I guess I'm curious, sort of the whole panel, the assumption is it's a good idea to invite TradFi off the streets and into the sheets. I'm curious if you can envision a scenario where like we all regret doing that and it ended up being a bad idea.
I think Vanessa kind of laid that out a little bit.
Yeah,
right?
I think the worst case scenario is there is so much institutional money pouring in that everything needs to be KYC'd. Permissionless projects get put on the sideline, and then innovation drops, and we just cater to the old world and the old thinking. So that's definitely a risk. And then in terms of the yields, I think, having more risk averse investors and too much volume to manage might cannibalize the yields.
No. Okay.
Hi there. I'm just a random pleb that got wrecked on BitMEX. So that's my question. Do you think the space needs more YOLO 125 leverage or less? Because like SBF and CSAT, like they met some months back and said like, okay, we'll reduce it. Institutionalized money doesn't like that. So do you think it needs more YOLO degens to move the space forward? Like everything goes, market will sort it out? Or should there be some, keep people from hurting themselves?
So first of all, when my daughter started using the word YOLO, I also try to remind her that YODO, you only die once as well. So I get very nervous when everyone talks, bring that up. It's old memories. I actually don't have much to say about that. I just wanted to make that joke. But
I think that's the name of a James Bond movie, isn't it? Or it could be.
Look, whether we want, and actually this is kind of maybe the previous question as well, whether we want these things to happen or not is kind of irrelevant. These things will probably just happen. There's going to be TradFi is going to get involved. That there's going to be people who are going to be guiding, and there's going to be people who are pushing, and some people who are trying to stop things. Like these things are just going to happen. So I think if from an entrepreneur perspective, it's the same question you always have, which is how do you invent something that's solving a problem? And there's going to be these kinds of problems, and so you absolutely can bring more people in.
I'm just going to give you a funds perspective. So I can't even believe SBF said it, but probably to grow FTX's volumes, not recommended. Even all of the funds that you take, hedge funds that you take in the entire space, no one's leverage is more than 1.5 or 2. That's it. That's it. That is it. We all stay away from leverage. And if as a retail investor, that's something that you're trying to play with, then yeah, YODO. So
Great. I just got the message that we should wrap up the panel. So I've really enjoyed this conversation. This is kind of the best. We should spend every Saturday morning here doing this. So
You bring the disco ball, I am there.
Yeah. So. All right. Well, thank you all. Thank you to the panel. Thank you to the audience.
Thank you guys.